Hello everyone, it's Joy and welcome back to CUMIC Weekly, where we bring you the latest Chinese steel prices and the market trends every single week. If you're new here, simply hit the subscribe and like buttons right here. Don't miss out on any future updates. This week, the China steel market remains under pressure, showing a weak performance with increasing overseas trade barriers and continued bearish property market. Let's break it down. First, on the export side, things are getting tougher. Starting April the 1st, Europe will cut import quotas by another 15%, making it even harder for Chinese steel to enter the European market. And that's not all. India is planning to impose a 12% temporary safeguard duty on multiple products, further limiting export opportunities. Now, turning to domestic demand, some sectors like automotives, home appliance, and shipbuilding are holding up well. But the biggest player in steel consumption, the property market, is still struggling. In just the first 2 months of this year, property investment dropped nearly 10% compared to the same period last year. At the same time, both new consumption and overall building activity saw significant declines. With demand lower than usual, market sentiment remains cautious. Next, let's examine the supply and demand side. This week, China's apparent demand went up by more than 200,000 tons. At the same time, total inventory went down by 400,000 tons, and production went up. While inventory is declining a bit faster, demand growth is slowing, and the last week's strong performance in hot-rolled coil has already started to cool off. With limited potential for further demand growth, pressure on steel prices is growing. So, where do we go from here? Right now, steel mills are seeing good profit margins, so they are keeping production levels high. But with demand falling to keep up, the supply-demand imbalance is expected to get worse. At the same time, raw material costs, especially coking coal, are still under significant downward pressure, leading to lower steel production costs. Given these factors, China's steel market is likely to remain weak in the short term. Well, what's your take on the Chinese steel market? If you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like buttons right here. See you next week. Bye bye!